Yeah, hello guys, welcome to this video. And on this video, I'm going to be telling you all about valid POI, point of interest. Points of interest. Yeah, yeah, point of interest. So basically, what are point of interest? Point of interest are those area of value or where you as a trader you're anticipating to buy or sell, or rather to take a particular trade entry when price get to that point. So POI are usually significant area that holds a lot of orders that is most likely going to cause a reaction when price get to that point. It's either when price get to that point, you can see a lot of buying pressure or a lot of selling pressure that are resting at those level. So now, your point of interest can either be in form of FVG, order block, breaker block, reclaim block, mitigation block, al- algo wick scandal. There are lots you can actually consider your point of interest. But then, for the course of this video, I'm going to be explaining to you all. Let me just list out the ones that I mainly use, because if you're learning from me, I'm sure you want to learn from someone. You want to learn from me based on what is working, based on what I trade with and what is working for me. So this is not just all about theory, but it's about what has worked for me and how I mainly use them when I see those kind of setup approach present themselves in the chat. So now we have the order block, we have breaker block, we have reclaim block, we have mitigation block, um, FVG, FVG. I don't really use that, but then it can be highly profitable when applied the right way. Let me change this color to black. I don't even understand the color of this text. I think hope I'm not missing any expansion. Okay, no. Other block, breaker block, reclaim block, mitigation block, and FVG. Yeah, guys. So sorry I had to cut to answer a phone call. So now other block is consists of a candlestick, whereby it's a candlestick that holds a lot of order, whereby when price approaches that particular candlestick, it's going to have a major reaction because of the order that are resting in that order block. Now for breaker block is a previously order block that is now invalidated. Now price coming back to that order block is going to make it a breaker block. Now let's say, for example, now at this point now, at this point, oops, sorry, hold on. Let's say at this point now, we have our point of interest to be an order block that is around this zone, whereby we expect price to get to that point and then sell. And then when something like this happen, we see that price got to this point and it broke above it. Now automatically this zone, you can still have another trade entry from this zone, whereby it's going to be your breaker block, because this other block was invalidated, which is now a breaker block that is most likely going to push price above. You understand? So now this is a breaker block. And for a reclaim block, now we have a reclaim block. For reclaim block is also an other block that was invalidated and now later reclaimed again. Now let me also give you an illustration. Now this is another block that you expect price to react from. Then price broke above it price broke above it, and then it still came inside within that zone. Now, if it was to be a breaker block, we are expecting price to come back and retest this previously invalidated order block and then continue movement to the upside. But there was still something that price still failed to hold on that breaker block. So we can say a reclaimed block is also a failed breaker block. You understand? And then see price come back to that zone again and then continue movement to the downside. Yeah, so this is a reclaimed block. This is a reclaimed block. And then a mitigation block. A mitigation block can mainly be identified as your major support and resistance level, and it can be used mainly during expansion. Let's say price expanded. Now, basically, there's going to be probably it's going to be an unmitigated zone or a valid order block that I can spot here. But now, based on this expansion, every expansion presents an opportunity for price to react from a particular level. Now, this expansion, now price is going to react from this, sorry, from this, how is this not picking up? Price is going to react from this previous low that price broke through. So price can react from there and then it's going to continue moving to the downside. Or if there is also another, most times now, they can might not get to this point. Most times you can see whereby there are zones like this around there, something like this based on past price action. You can see that price might not get to this point. Price is most likely going to react from this level, and then it's going to sell. You understand? So this is mitigation block. And for an FVG consists of three consecutive candlesticks whereby price leaves an inefficiency or an imbalance that price is most likely going to fill and then continue movement to that direction. So let's say as a result of this expansion, or let me just use another example. Let's say there are three candlesticks like this: one, two, three. Why is this not picking, man? Yeah, just hold on. Don't laugh at my illustration. I'm just trying to make it much more easy for you guys to understand. Like I said, it consists of three consecutive candles, which is either three bullish candle or three bearish candle, whereby the preceding candle there is always an imbalance or a gap that price is most likely going to fill or to retrace to. And at this point now you can see that there is a gap here at this preceding candle, whereby we can see that after price, let me say if the movement was formerly bearish, and as price approach this point here, you can see a situation whereby price is most likely going to go back to this fair value gap and then continue movement to the downside. So now these are the most important entry models, or no, not entry models, point of interest that every trader or majority of the traders out there use when trading. So particularly now, look for let me just look at the chart and look for potential point of interest on XAUUSD. So what do I identify as a valid order block? When it comes to order block, to me a valid order block is when price take out liquidity from the preceding candle. For example, now this one, price took out liquidity from the preceding candle. Hold on. Yeah, sorry about that. So now this is a valid order block for me, and the presence of this inducement or this liquidity that is close to it. So to me now, for a valid order block, I want to see a liquidity close to that point. So now there is this liquidity here, and then this other block. The other block must either sweep liquidity from the preceding candle or take out liquidity from a pre-existing high or low. In this case scenario, it's going to be a preceding high. So now I pick this out as the other block, and then as you can see, price came and it reacted from it. Now, mind you, for a bearish order block, it has to be the last bullish candle before the bearish move. You understand? So now if I want to pick another block, it's going to be this last bullish candle, not the bearish one. You also need to pay attention to that. Most people just pick other block randomly without even knowing what they're taking as the other block. So now, this is a typical example of another block. As you can see, price got to this point and it starts declining. Now let me look for breaker block. Let me look for breaker block. Yeah, perfect. Right here we have one. Right here we have one. So we have this breaker block here. This other block here. That we expect it to push price lower since price is already going down. But then we saw price broke above it. So this is the other block. This was the previously other block that is now invalidated. Now you saw price broke above it and then came back to retest it, which now make it to be a breaker block. So this is a breaker block entry, and this is the liquidity. Like I said, for a breaker block, there also need to be a liquidity to validate it. Now you have this liquidity here, and then price also have a break of structure to validate it. So for a valid breaker block, you also this is the movement for a valid breaker block. You want to see this. You want to see price do something like this and then take out this liquidity. Now this liquidity now is an incomplete pullback. Now after price did something like this, you expect after price create this incomplete pullback, you expect price to come back and tap into this breaker block, then continue movement to the upside. So this is a typical example of a valid breaker block. Valid breaker block. The presence of liquidity and the break of structure, at least one break of structure to validate this breaker block, which we have here. And now for a reclaim block, for a reclaim block, a reclaim block, reclaim block, reclaim block. Mm, Claim block. Can I identify this as a reclaim block? No. Can I identify this by reclaim? No, 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 no. Reclaim block. Okay, yeah, I've seen a reclaim block now. It has not yet played out. It hasn't played out yet. It hasn't played out yet. Let me move down to the 2 hour time frame. I think it is very clear. Nah, 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 nah. Hold on. Let me just use this GPUSD setup that I have here. Now I have this set up on GBP USD. I have this set up on GBP USD, and as you can see, no, this price didn't really break above it, but then price invalidates this other block, but it didn't really go up further as I expect it to be. But this is also a reclaim block, but then it's not very clear because price didn't break through it. So as you can see, this other block here, this last bullish candle before this retracement to this point, price invalidated it and it still failed to turn it to a breaker block. And then I'm expecting price to go back all the way up there, take out this liquidity that is close to it, tap into the reclaim block and then sell. So that's a breaker block. That's a reclaim block, sorry. And then for FVG, let's go back to gold and see what it has for us.
So guys, on the previous video that I was making, my phone got network issues, so that's why I have to continue on my phone. Well, I think the last part of that video is supposed to be about fair value gap. So quickly, let me just show you what's all about, how you can identify them on the chart and how you can trade them. So mainly when a market approach a major level, let me say high, fair value gap can mainly be used to trade. Yeah, so FVG is mainly used to trade continuations, not reversals. Although when that FVG is invalidated, it can be flipped, and at that moment, that's when it's going to be called an inversion FVG, which can also be used to trade towards the opposite direction. So for now, we can see that gold approaches this zone and it started declining. And remember what I told you about FVG, it consists of 3 consecutive candles, whereby the preceding candle leaves a gap behind for price to come and tap into, or probably price going to come to that level to fill out that gap, that imbalance, and correct it before price is going to continue its major movement to the direction it's going. So right here now, we have this FVG at the preceding candle in between the 3 candle. You can see the gap, and you see price came into it, the FVG, it tapped into it, and it's reverse, start going down. Now for an inversion fair value gap, there's a situation whereby you see price does something like this. You see price broke above this fair value gap. Price can also come back to this fair value gap and it's going to be called an IFVG, and then you can still take a possible buy position from this point. So basically FVGI is for continuation, but when it's invalidated, it can be used to trade reversals. That's IFVG are mainly used to trade reversals, FVG are mainly used to trade continuations. And you can't just trade just FVG like that, you have to add other confluence. For example, now this is a liquidity, this candlestick here is a liquidity. If I go to the lower time frame, it's going to be more clear. But then with this liquidity being present here, it's add more confirmation for me if I want to take that FVG trade. So you need to add other confluence to making your POI much more valid. They have to be sweet, presence of liquidity and all of that. So that will be all for this video, guys. Thanks for watching.